Hey folks, welcome to the show. Hello Sharad, looking very dapper in that white shirt of yours.
And I'm also very excited because we are back to our.
I thought you'll compliment my white shirt as well. I mean,
You're always wearing white shirt,
I mean,
you don't need a.
anyways, that did not work.
So I'm excited about another fintech.
Yeah, it's been some time. It's been some time. We kind of were hitting a lot of fintechs. Then from there, we moved to, I think, a lot of commercial real estate, property tech type of conversations. A bit of debt and credit investments kind of slipped in. We have with us Subhrangshu Kumar Neogi, co-founder of Escrowpay. Hey, Subhrangshu, how are you?
Hi guys.
Welcome to the show. Quick background on you before we kind of kick on. So Subhrangshu, you're ex-Hindu college, you're history honors. Then I think things kind of moved away from the tangent. You decided to do an MBA from IMI, and you've spent a fair bunch of years in a number of corporates, mostly in sales, marketing, and product-oriented roles. You were at Dabur, at Reebok. You were also at Times Group, and spent I think a decade in Religare as the head of group marketing and brand. And I think last half a decade has been with Escrowpay, a digital escrow solutions company. Uh, a big welcome to the show, and we'll kick off,
Thank you.
by trying to understand stations. And we saw a couple of interesting data points there, right? Two lakh crores is stuck in delayed payments. 80% of SMEs experience late payments. So I think, before we talk about Escrowpay, the company, the offering, the business model, we'd like to understand what's the classic problem statement here. I mean, me and Sharad, kind of coming from a transaction banking background, understand, because we see a lot of, I would say, interesting uh, trust deficit dynamics when it comes to deals. But I think for our audience, could you explain in a layman manner the classic problem statement, along with a few use cases, maybe, with a few examples of potentially your clients, the FIs or corporates that you're working with?
Right, right. No, great. And I think, thanks for having me on this chat and conversation. And I think, as you rightly said, before we kind of dive into the business model for Escrowpay, a little bit about myself, as you rightly said, as karma would have it, I was very keen to sort of write the civil services at one point in time, get into administration. And therefore, I studied history because, at that point in time, history was a high scoring subject in the UPSC exams. But peer pressure or whatever you might want to call, I ended up writing the CAT, ended up doing an MBA, specialized in marketing. And when I interned with ITC, I was recruited from campus and I saw sales and distribution. That's when I fell in love with FMCG and fell in love with consumer marketing. And I decided, ye karna hai, so this is what I want to do, right? And that's how my journey began with FMCG, retail, telecom, and of course spent almost 12 years in financial services, as group CMO for Religare, and then higher education. So I was fortunate enough to see multiple sectors across business cycles, as I call it, pre-liberalization days to, early years of digital economy or early years of the internet and the bust that happened, then pre-Lehman, post-Lehman, demonetization, and then, all of that, COVID, and then post-COVID, right? And then, of course, after about 25 years in various corporate leadership roles, I jumped into entrepreneurship because I always thought that was my calling. So my association with Escrowpay essentially started out in 2017, along with my co-founder and CEO of the business, Ashwin, my partner, as an investor. So I actually joined the company as an angel investor to start with, but I actually saw that he was doing and building something really cool and was keen to participate in the journey. And given my background in financial services, I thought it was a perfectly nice sort of a culmination in terms of, an alignment of our values and our objectives and goals in life, that I ended up making a small investment in my personal capacity, in the firm, and joined the board. And then 2019 end, when I transitioned full time into entrepreneurship, that's when I started, sort of playing, an operating partner's role or a co-founder's role full time in the company. So as I tell people, in lighter vein, I used to be 30,000 feet over the weekends, from a guidance perspective for the business, but now I'm kind of minus 3,000 feet, immersed completely in the operations of the company. That's a little bit about myself. And coming back to the point of why we started out, I think the problem was very simple, or the the vision was very simple. We wanted to democratize escrows. We wanted to usher in trust and transparency in transactions because, as we've seen across the board, and you being, investment bankers and people who've seen transaction banking would understand that escrows largely is not a new concept. It's been used by the banking ecosystem for years now for large ticket deals, cross-border deals, M&As, and investment banking deals. But nobody was really using it for your day-to-day normal transactions, recurring payments, and so on and so forth. So that was really the vision. And I think the starting point was when, Ashwin, my partner, when he was actually working on a very large deal between two large corporates, they used an escrow. And he started tinkering around with this thought that, look, why can't I democratize this? Why can't I create, something where this can be used as a mechanism to, sort of usher in trust and transparency in transactions at small ticket size, democratizing. Spoke to banks, worked with banks. So we currently are partners with we've partnered with multiple banks in the back end. And we've built out a digital, a platform which is completely unified where the bank is on the back end, there's a trustee in the back end, a payment gateway in the back end. So we integrate with all regulated entities and we created a seamless, sort of a front end for our stakeholders, for our customers. And by the way, we are B2B focused, we are enterprise focused for our clients, which are typically businesses, would want to use this escrow mechanism for introducing trust and transparency in transactions for their underlying stakeholders, right? So right from identity checks, which is instant KYC checks, to digital contracts, signing of digital contracts, and then finally culmination of the transaction through pay and payout through the escrow mechanism. We do it all across our unified, seamless digital platform. We are proud of the fact that, we were pioneers in this space. We started it all, at one point in time, almost 7 years ago when we started this out. There were people very skeptical. What are we going to be doing digitizing escrows? Because, traditional bankers have always seen this as a core banking product. But I think the problem was that if you were to go in for an escrow account, forget a solution, even an escrow account, opening an escrow account itself used to take weeks. It still does take weeks, right? So if you're a digital first business, if you're an enterprise, if you're a business looking for a solution, I think getting that solution from a bank or a legacy financial institution is a pain, if I were to use that term. It often takes more than 8 to 12 weeks, right? One, banks are not systemically sort of designed, as I call it, to solutionize because they are more sort of akin to or rather sort of aligned to offering linear products, as I call it. So if you were to work into a bank branch, and if you're, let's say, a business sitting out of Gurugram, you were to work into your bank branch and get a credit card or a CASA or a current account savings account or any other product like a lending product, it's very easy to get that today through third-party products that banks are distributing. But the moment you, let's say, were to even remotely ask for something akin to an escrow-led solution or an escrow product, people just go into a tizzy. More often than not, your regional level at a bank branch level, you're not structurally sort of designed to deliver this as a solution. So you typically go back and forth between your corporate office, your legal team, because contracts, legal, sort of paperwork, etc., the backbone of an escrow account or backbone of an escrow, offering. So therefore, given this back and forth and given the non-linear nature of this particular solution, that's the real pain. So it takes a lot of time. The journey is very cumbersome. What we've done is, given the sort of digital platform that we built and given the nature of relationships we have with banks and other regulated entities, we've been able to actually create a, as we call it, a smart, fast, and, sort of a very safe platform for delivering escrow on the go, for MSMEs, digital services, platforms, etc. Now, coming down to use cases and coming down to, what kind of transactions that we do, broadly, I mean, of course, there are multiple use cases. And as we've seen in our journey over the last 6 years, there are various use cases that actually we co-created with clients, which did not even exist. Okay. So the most obvious one that we started off with was real estate. When we started out, let's say a secondary or a resale property transaction, let's say, I'm a buyer, you're a seller, and then there's a platform and Nikhil, let's say, is a broker or is an agent, trying to sort of intermediate the sort of relationship between the two of us. And if I'm buying a property, let's say for 1 crore, and you're selling your property, the matchmaking is done. You expect me to, let's say, give or sort of offer a token amount, for sort of locking in the deal or locking in my intent for buying your property. So I, let's say, put in 10 lakhs in your account. 15 days down the line, once I've done that, maybe 20 days down the line, my mortgage doesn't go through. Or I decide that, look, I don't want to be interested. I'm no longer interested in this property. I tell the broker, I tell the agent that, boss, I want my money back, right? But you as a seller say that, boss, hang on, you expressed your commitment, you passed on the money, I've kept my property on the block. I'm sorry, but this deal, how can you just withdraw from the deal? I'm not giving your token money back. The deal was a done deal. So then the money gets stuck. And this has been, our research has actually proved that 6 out of 10 cases around litigation and real estate pertain to issues like this, where token monies are stuck.
Yeah.
Okay. That's a big, big problem for end consumers. And the broker or the intermediary typically, he just washes his hands off, if I were to use the term, and say, boss, aap dono nipat lo. You guys have met. Why don't you guys figure it out? Classical use case of using escrow, what we did initially in our initial years when we launched, we actually launched this token amount product for real estate, for rentals, wherever there was any contingency involved. And we started out like that. So instead of me putting in money into your account directly, put it into an escrow, right? If the deal is going through, we move the money directly into your account from the escrow. If it is not going through, comes back into my account.
Is
right?
Which, and in the problem statement of the sector you identified is very intuitive and fairly clear. But the average consumer, when you sort of want to grab him or make him understand, is it tough to educate them? Because it's another agreement that they're signing. Yeah. It's another participant that's coming into the loop in this transaction. Buyer, seller, broker, now there is an escrow agent. There's, so is that, and everyone, when it comes to transactions, right? I mean, like you said, 6 out of 10 are stuck there. Everyone thinks that they're in the 4. Until it actually gets stuck, right? People assume that, I want to get into it, it will be done. So is that a challenge to sort of build that?
Big challenge. So, I took a leaf out of the book of insurance, right? Where even now, the insurance sector has been digitized considerably over the last few years. But insurance as a product is still sold, okay? And it's sold really by agents. Took a leaf out of that book and said, look, who's really the agent and who's really the intermediary who's actually doing these real estate deals, right? When buyers and sellers are talking to you, it's platforms, it's brokers, etc. So we used our offering as a plugin for them, educated them rather than educating the end consumer when we started out, and said, look, this becomes an embedded offering for your offering to your end consumers, right? And the offering and the benefit to the broker was, or the intermediary was, that you can also sort of collect your receivables or payment and brokering from the escrow itself. Otherwise, typically what happens, the deal is through, the broker, poor guy, if you were to call him so, he's actually negotiating with the buyer and seller, and people start negotiating. So it's a win-win for the buyer, the seller, and the broker. That's how we positioned the product initially. Mm-hmm. But then coming back to your point, it was not a very capital efficient business in our initial years. And we took a conscious call that, look, rather than educating the consumer, rather than kind of doing that grunt work, why not look at businesses? Why not use it as a plugin for enterprises, for businesses? Because there are a lot of contingencies and contingent transactions where an escrow could be a perfect use case. And given our vision, of, sort of democratizing this further, and given our vision of looking at payments and fintech as a space at large, as opposed to prop tech, we pivoted. Mm-hmm. So from a B2C focus, real estate focus model, we decided to try, sort of progress beyond real estate as a use case and get into multiple categories. So today, if you look at our complexion of our business and nature of our business, we are category agnostic, industry agnostic, payment size and transaction agnostic, right? So what that means is we currently, and rather than getting into specific use cases, I'll walk you through 3 large buckets of transaction types that we are into, okay? So that it's easy for everyone to understand the kind of business that we do. So the first bucket of transactions that we are into is what I call a typical bi-party scenario. There's a buyer, there's a seller, there's a platform. So you have a lot of B2B commerce platforms, you have a lot of agri-tech platforms, you have a lot of gig platforms, you have real estate platforms, used auto platforms. So on one side, there's a buyer, then there's a seller. The platforms today, they want to obviously add value to their underlying stakeholders. One of the things that they want to do is introduce trust and transparency, and therefore they're looking for an escrow mechanism. They go to a bank, they figure that it's not an easy solution. They are a digital first business, so therefore they are looking at a digital first solution. Therefore, they come to us. We embed escrow as a service to these people. Like your software as a service, we've introduced escrow as a service, escrow as a solution, for these platforms, right? Yeah. Where they use this as a mechanism to introduce trust and transparency for their underlying stakeholders. So for us, our client is the platform. Our client is this company which is wanting to actually usher in trust and transparency for their underlying stakeholders. So typical bi-party scenario where we use escrow as a plugin. So we are an API first organization. So we plug in into their app through APIs. If not APIs, there are some platforms who are looking for a dashboard or a console-based solution. We also offer that. That's one kind of a transaction, which we are offering in the market today, right? The second kind of transaction or type or a bucket is what I call collect and split. So typically, let's say there are organizations, NBFCs, financial services companies, etc., who are doing conditional collections. To give you an example, NBFCs, which is a large chunk of our client base today, a lot of these guys of late have started doing non-collateralized cash flow-based finance, right? Which is the new flavor, especially in the MSME segment, etc. So some of these large NBFCs, typically, let's say, Sharath, you're a SME borrower, okay? Nikhil is an NBFC, let's say XYZ NBFC, who's into non-collateralized lending, right? And I am an anchor client, as I call it, who's a buyer of services from you, okay? So you go and tell Nikhil that, listen, I want working capital, but guess what? I don't have collaterals. Can you extend a loan to? So Nikhil takes a view not on your a collateral, but he takes a view on the kind of relationship that you have with, let's say, your anchor clients like me, who could be tier one anchor clients. Let's say an ITC, Dabur, etc. Could be an OEM or a packaging supplier to me. Okay, so you get your invoices discounted. Yeah. Okay, and again, then since you guys are financial professionals, you understand where I'm coming from, but this is just kind of breaking it down so that everybody who's listening in, they would know how the equation works, right? So typically, the invoices are discounted, right? The loan is given or extended to you. The disbursal happens. When the collection happens, the collection and the invoice is due from me to you. Instead of me paying into your current account, I pay into an escrow that Nikhil has taken from Escrowpay, right? So the money falls into that escrow. There's an instant split that we do. There's the first charge that the NBFC has. They secure their collections and the balance goes back to the borrower.
So it's a classic like vendor and dealer financing frameworks, right? Where you intervene.
Absolutely. SID cases, supplier invoice discounting, purchase invoice discounting, and so on and so forth. And that has become a big flavor of late, right? So this is a classical use case for us in the financial services category where NBFCs and lenders are our clients. Okay. Then, of course, you have, let's say a franchising kind of a scenario where, let's say, you're a mid-sized brand, okay, or you're not a very big brand. If you're a big brand and you have underlying franchising, you have to collect your royalties. You have an F&A team, sort of sitting and sort of, doing the reconciliation at the end of the month. You have the luxury of people. If let's say a mid-sized brand, small brand, you don't have the luxury of a very large team, and you need to kind of reconcile. It's a painful process. Let's say 50, 60 underlying franchisees, etc., and you have to, settle your royalties. So what we tell them is that, look, guys, use an escrow account, use that as a collection tool. So, your collections from your underlying partners come into that escrow account for collections, and then there's an instant split where you recover your royalties and the balance goes back to, let's say, the underlying partner or the franchisee, right? So another use case, just to give you a flavor of how conditional collections happen. So it's a collect and split model that we work on, right? The second type of, transactions that we work on. The third type of transactions that we work on is, as I call, collect, hold, release, and then return. So typically, let's take a case of, revenue-based financing. Or even better, let's take a case of, let's say, a fractional investment platform, right? So on one side, you have investors. Okay, you have a platform in the middle, who's our client, as Escrowpay's client. And then on the other side, you have, let's say, an investee company or a special purpose vehicle, right? So let's say there's call for money, 30 days, 20 investors, 10 lakhs each. You want to collect 2 crores. That's aggregated or pooled into, let's say, not on the books of the platform, but into an escrow, which is plugged in by us, right? Once the money is collected, then it's pushed out or, released to the investee company. When the return comes in, let's say it's a rent yielding asset. When the return comes in, again, falls into the escrow and it's kind of couponed out to the various investors. And the platform also recovers its, charge. So again, typical use case, right? So you have bi-party, as I said, collect and split. And then you have this conditional collect, hold, release, return kind of a mechanism, leg 1 and leg 2. Then, of course, there are special purpose escrow for gaming, etc., and so on and so forth. But broadly, these are the kind of three sort of, broad, transaction types that we are into, through APIs and console-based solutions for our clients.
Yeah. In sort of the second model, right? And the reason I'm sort of, any of the three, but when you compare it with your earlier of the real estate example, that sort of has a slightly non-recurring profile when it comes to at least one side of the party. A broker might be selling many houses, but the buyer in that case is probably going to buy 2 houses in a two or three, whatever. Correct. In this case, right, the when you sort of get into MSME and you're talking about factoring or invoice discounting, you're automatically creating recurring profiles from both ends. Right? Now, when you're talking about a recurring profile like that, how does the revenue model, and you said like, as you know, escrow as a service, is it sort of as a function of how much money is put in the escrow and that sort of pegs the revenue model? Is it just going to be not as a function of the amount of money, but you're sort of just buying the ability to hire an escrow for as long as you want, if and when, plug in, plug out? How do you sort of think about that aspect?
Yeah, so to answer your question, see, number one, first of all, price discovery is yet to fully happen in this segment, right? Because we've evangelized this and it's a new category. Luckily for us, first 4 years, it was really tough for us to really sort of go out there and evangelize, but it was fun.
Yeah.
Last 2 years, a lot of new businesses have come in. Some traditional payment gateways and payment players have also started, offering escrow as a service. So luckily and good for us that the category is becoming more vibrant. So what we used to sort of do pretty much on our own in terms of the heavy lifting of evangelizing the category. Obviously, there are half a dozen other players who've come in who are also doing that along with us. So that's one. In terms of our revenue model, the way we work is that, we like a SaaS provider, right? So there's a one-time solution fee.
Okay.
We sort of, charge from our customers, which could be the enterprises, the businesses, startups, MSMEs, etc. Then there is a transaction fee that we charge, which could be a percentage of the TPV, or it could be, let's say, a fixed SaaS model for unlimited transactions in a month, depending on how the volumes are, etc. The core float, and since you're bankers, you would understand the float in the escrow basically goes to the partner bank that we have in the back end. So obviously, we don't earn from the float because technically, also as per regulations and regulatory frameworks, we can't have a float share. So the float comes to the bank. We get a transaction fee, and the underlying client that we service gets trust and transparency. It's a win-win across the continuum, right? So initially, banks were very skeptical, and which is where I'm saying they've also kind of moved along this continuum because now they see us more like co-creators, as opposed to being competitors to them. Okay, and it's also taken a lot of cultural transformation in terms of their mindset change. So they suddenly. And this whole thing around collaboration with fintechs, which they are doing across other product categories, also holds true in our category, right? Yeah. Where the bank basically, actually, we are delivering float to the bank without they having to spend on marketing or sales or infrastructure or driving and marshalling their troops to get the kind of business that we are delivering to.
Yeah.
Okay, we are delivering business. They get the float. We get a transaction fee, which is a one-time solution fee, and then there's a transaction fee on the transaction that we're making on the TPV. And then, of course, the underlying stakeholders, get trust and transparency. So it's a win-win across, for everybody.
Yeah.
But I mean, in terms of the interesting point when you mentioned the partner bank, how does interoperability come into the picture here? In the sense that is the platform to whom you are pitching an escrow solution for them which is your partner bank? Is that
it's
a consideration?
So absolutely, it's agnostic of the bank that you bank with. So let's say, Nikhil, you are banking with XYZ bank, right? And I'm offering ABC bank. It doesn't really matter, okay? Because our platform is agnostic of the bank that you bank with. So you don't really need to open a fresh bank account with my partner bank.
No, I understand. But as a potential customer, is that any point of concern?
Well, not really. I mean, we've not really seen that.
But there's no pushback on the fact that, okay, I would prefer to have an escrow in the bank, which I am
really.
Right.
Well, there have been cases where, people say that, look, I prefer XYZ, which is why if you see that in the back end, the pipe has about almost half a dozen banks that we, are partners with, right? And which is a question with a lot of people that ask that, look, why do you need multiple banks? Precisely for the reason, because at some point in time, as we speak, we're shoring up the number of banking partnerships. At some point in time, we would want to offer that ideal choice that, hey, if you're banking with, let's say, your banker, we also have that in our portfolio, right? Ideally, if you ask me, we don't need multiple banks. But see, I think the partnership, the reason why we have multiple banks today on our platform is A, because of the choice to the customer, number one, eventually. B, because, there are multiple use cases we have that we would want to route through specific banks. So it's also creating a redundancy layer from our business model perspective. C, also because banks end up giving and referring a lot of businesses to us, right? Because a lot of these banks also get a lot of incoming queries where they are expected to deliver in a very agile and a quick turnaround time in terms of a digital solution, which is where they say that, look, this is a case that we have. Why don't you guys close it? And then it becomes a win-win for both of us, right? So I think collectively, collaboratively, between us and our banking partners, it's a great relationship. And obviously, it's still very evolving, because the category is new. It's still evolving as a relationship matrix. But eventually, like any other fintech layer, we are like, as I call it, a digital layer on top of the conventional legacy backbone of banks.
Right. And how does the process of, because one aspect is obviously to kind of carve out a kind of ring-fenced mechanism for fund collection, fund split, etc., right? For that, obviously, you have kind of API integrations with your banking partner, with the platform that you have, as your client. But the other aspect, maybe it's not relevant in, like, say, a vendor or dealer financing kind of a play where you are kind of discounting invoices. But say if you're looking at a transaction where there's a fair amount of definitive documentation which is backing it, right? Be it an acquisition or be it a fundraise, there must be an authentication layer as well, right? And that also would probably have a digital journey of its own, in the sense that the definite docs have to be signed digitally, would have to be authenticated by, so how does that part of the value chain work?
No, so very good question. So the way we work is that, we basically use, so let's say we're catering to a platform, right, which is buyers and sellers. Now that platform would have an inherent agreement with their underlying stakeholders, right? So we take that as sort of a sacrosanct document or starting point and review that. And we have a, back-end legal team, etc., which very quickly embeds certain escrow clauses and makes this contract escrow ready, as I call it.
Right.
Okay. And that is what everybody abides by. That becomes really the backbone of the entire transaction. So the pain happens into the escrow, and when the conditionalities are met, or the, sort of the milestones are met, and there's a payout that needs to happen, into a beneficiary account, we are sort of authorized by our client, which is the platform in this case, which gives us something called quote unquote release instructions. So based on those release instructions, we move the money. Right. And of course, there could be a scenario where there is, let's say,
but is this authentication like a manual exercise where, like, someone in your team?
No. It's completely digitally driven.
Okay.
Release instructions completely digitally driven. Contracts, as I signed, as I said, our platform, right from KYC checks, identity checks, to signing of digital contracts, reviewing of contracts, everything is on the platform, and then finally pay and payout happens through the platform, digitally. Right. So this is completely digitally. The entire journey is digital. Of course, our product has evolved over the years. Initially when we started out, it was partly digital, mostly manual. Then, mostly digital, partly manual, and so on and so forth. But now it's completely seamless. And as we talk, it keeps evolving. So the next version of the product that we are launching would be more B2B payments, across one MSME to the other. And of course, we are launching a bunch of cool features around that. So obviously, it's an ongoing journey, as you know, for any platform, any product, to keep evolving as the ecosystem keeps evolving.
And just to, we've, like you rightly said, we've seen a surge in cash flow-based underwriting companies, right? And starting with retail, and obviously now MSMEs it's become the sweet spot. And one of the, when we speak to a lot of guys, like, obviously a lot of people take a lot of pride that they have very low NPAs and collections is not a problem. Some have inbuilt call centers, some have outsourced it to companies. But from your standpoint, right, how does the collections piece work? Well, for a willful, let's call it, delay in payment, not even a defaulter, but someone, I understand, like, in RBF, you're just taking a cut. You have probably access at the payment gateway level. You're just taking it from the top line. It's fine. That's doable. But when you have structured it differently, how does that, how do you sort of nudge that? Because there is a legal document which is not a structured payout cycle, but it's not sort of enforced digitally. So how does collections happen in such a scenario?
See, we've not really seen, especially in SID, PID cases, typically there could be delays. But given the fact that these are anchor, clients, and these are, sort of tier one anchors, we've not really seen defaults per se, right?
Yeah.
So I think the kind of average delinquency level or NPA levels, in a sort of a cash flow based financing scenario is relatively way lower than what you would traditionally see in, let's say, business loans, unsecured loans, etc. Right? So I think today, and I can speak for our partners, lenders, etc. When they lend, and we are obviously, it's like, we are in a stadium and watching a cricket match. So we are actually privy to the cricket match in front of us, but we are actually not playing there. We are pretty much like an embedded service. we've been seeing that it's a fairly smooth and a sort of a seamless journey, and which is why you see a lot of NBFCs today, a lot of lender partners that we have, are betting big on cash flow based financing, especially in the MSME space, and that is what is democratizing access to capital and access to credit in a big way. Okay, yeah. So the traditional system of only looking at collateral, linear view on P&Ls and linear view on the books of accounts, which a lot of legacy institutions sort of used to use as a vector for underwriting, I think is a thing of the past. Yeah. Right. Given that, I think credit therefore is getting democratized. Digital, and there are tools available. A lot of new age lenders that you've seen, and even traditional NBFCs are getting digitized now. Traditional banks are getting digitized now. Are looking at a lot of technology based tools and algo based tools, and AI ML based vectors to underwrite. In a more scientific and a more realistic manner, right? And obviously, look, I think, and this is again my view and purely a personal view, and I'm not a lender, so I can't really talk to all lenders, but my personal view, having been in financial services and seen it, there would be willful defaulters in every category. Okay. So there are rogues in every category, and there are sort of, willful defaulters. But by and large, if you're an MSME, if you're a business, there's so much riding on you, and there's so much riding on what you're sort of borrowing on. I don't think the quantum of willful defaulters is higher. It could be a cash flow based scenario. It could be a situational issue. And therefore, there could be a delayed payment. But pure sort of, delinquencies, therefore, would be relatively low.
I'm interested to know how things used to work before players like you arrived, in the sense that, like, escrow is a fairly known concept with mechanics, right? And as you yourself were mentioning that, when it comes to large corporates, it's something which was happening, is happening, will continue to happening. And you consciously targeted SMEs. So was it an exercise of you pitching that, okay, this will actually lead to higher, transaction volumes because you don't have escrow? Or was it like they were actually trying to use escrow services but were not happy with an experience, and it became more of a customer service point?
Well, I think it's more of a service point because, see, at large, as I told you, for all banks, look, banks have been offering escrows for like ages now, right? I mean, it's not a new concept. It's not that we suddenly came and introduced a new concept.
Right.
We just digitized and stitched it all together in the form of a unified platform. So if, let's say, you are a customer today and you need an escrow.
No, but what I meant is, like, were SMEs seeing transactions fail because they were not using escrow, or was it like they were utilizing escrow, but the process was so cumbersome and time consuming, etc., and you kind of came with a plug and play?
No, both. I think it's a function of both, and fundamentally, I think it was one issue is that, if today I were to take an escrow from a bank, I would have to go and talk to the bank separately. I would go and have to talk to a PG separately, a payment gateway. I would have to go and talk to maybe a trustee company separately. What we've done is we've simplified that process. Right. We've made that ease and access and availability has been democratized by us, right? On the other hand, people have woken up to the fact that, hey, you know what, if I use an escrow, maybe my processes and my offering will be optimized and become more efficient, right? So it actually works at both levels. Right. Okay. Now, coming back to the kind of organizations which are using our services, we are currently catering to unicorns, unicorns, large and listed entities, as well as small entities, as well as people who are in their formative stages. We also work with clients who've just probably incorporated their, sort of company. They've just started doing some transactions, and they have woken up to the fact that, look, can I have a more trusted mechanism on my platform? And which is where they think that, hey, you know what, maybe an escrow is a solution. Escrow as a service is a solution. And they come to us. So we work across a cross-section of clients today over the last 5, 6 years, 7 years. But I think the sweet spot for us would be digital-first businesses, MSME, emerging businesses, because that's the sort of, unserved and underserved segment, as I call it. Right. Because if you're a large client, large corporate, you already have a great relationship with a banker.
Right.
Any banker worth their salt would probably give their right arm, right leg to service those clients.
Right.
So the pain from a servicing perspective is not there. But if they're expecting a digital-first solution, some of the large corporates, them also it can become potentially painful. But the real pain is within this segment that we are catering to, which is the unserved and underserved MSMEs and digital-first businesses. starts.
Where do you sit from a regulatory standpoint? Like when you look at, in the payments domain, you have, payment service providers, you have third-party applications, you have payment aggregators, right? You obviously require a partner bank. So effectively, you are a technology provider at the end of the day. But how would, say, RBI or NPCI look at you as an entity?
It will be more RBI, right? Not really so much NPCI. Okay, so we are a digital platform sitting on top of legacy institutions, right? And interconnected and it's sort of linked up and synced up with all regulated entities. So whether it is a bank, NBFC, or a payment gateway, and so on and so forth, right? We are neither a PG nor a PA, but again, we are in the transaction processing business. Okay,
right.
So way early in our journey, we actually went and proactively sort of took a guidance note from the regulator, and they told us that, look, we intend sort of looking at space, but as of now, we don't think that you're either a PG or a PA, and therefore we don't really have any direct hard regulations on us. But having said that, I think we definitely as a firm see that this space potentially would get regulated in the times to come. And that's when we are, obviously sort of in a position where we are sort of regulatory ready, as I call it. And of course, we are now getting into, the GIFT City and IFSCA, and we are looking for a license. And we've applied for a license. If all goes well, I think very soon we should be in a position to have that license as well.
You mean from the standpoint of cross-border flows?
Cross-border. Yes, the cross-border. So currently we're catering to largely domestic transactions, but from a cross-border perspective, we are looking at a IFSCA GIFT City license as well.
That's very interesting.
As I told you, there are no hard regulations, but at some point in time, we expect that regulations would be there. And we believe that, the way we've kind of built and sort of shaped up the business, we are regulatory ready. And as and when, regulations do happen, we would be more than happy to embrace them and, be fully prepared to meet and comply with the requirements.
But I guess the regulations here probably would be more in terms of the tech infra, in terms of interoperability, in terms of those compliances, rather than in terms of capital, right? Because effectively, there's no balance sheet play here.
Yeah, I agree with you. But again, that's yet to play out. So we don't know how it's going to play out. But to give you an example, I keep often taking this example. So let's say when P2P lending started out, right? Some of the big boys in the game today, when they started out and had the, sort of, when I was in the corporate avatar, I met one of these large players, right? I don't want to name them, but they came and met me for a potential alliance at that point in time. Now I asked them to look, what is your regulatory standpoint? Okay. So they said the same thing that, look, we evangelized this category, and you probably would know who I'm referring to. They were evangelizing the space from P2P lending perspective, right? And they said that, look, we don't have hard guidelines. We've approached RBI for a guidance note. There's a discussion paper which is coming in. And once the sector sort of really grows and matures and evolves to an extent, the RBI, the regulator comes in and says that, okay, now we'll introduce hard, regulations. And then over a period of time, we saw that space, being, sort of hard regulated by the regulators. So I see a similar sort of a trajectory evolving in escrow as a service as well.
How do you see the market? Yeah, sorry.
We often engage with international funds from our personal networks, and the big private equity funds and the big VC funds obviously have presence in India, but some of the smaller funds who've never invested in India, who don't have boots on the ground here, one of our pitches to them is, we'll sort of be your India partners here, and there has never been a conversation that has happened without an escrow construct, right? It's the entire trust, transparency, efficient collections just gets put under a magnifying lens the moment there's a cross-border angle.
Right.
So I think that's an important growth lever, right, for you guys to sort of tap into.
Yeah, absolutely. I mean, cross-border is a very, very big space, especially from the context of even MSMEs. I mean, today we look at exporters and the import volume that is there. The traditional LC structure and the traditional sort of payment structure is, again, there's a lot of paperwork. It's not agile enough. There are inefficiencies. So we are obviously examining that. I mean, we had a choice. It was a model choice. We could have started cross-border also, initially. But I think as a firm, our choice was that we wanted to consolidate our position, and reach a certain critical mass in the domestic onshore transactions, and then look at cross-border and, sort of offshore transactions as well.
How do you see the market grow? Because is it and also, like, which do you think are the hero drivers here? Like, one, obviously the obvious one that and the fact that you have a lot of NBFCs on your client suite is that when it comes to unsecured cash flow based lending, with the digital led businesses, that's only going to grow. Like we all know the numbers in terms of SMEs, be it like 350 billion dollar potential TAM of underserved or unserved SMEs from the standpoint of credit, and most of them now have some sort of a digital footprint, so that's going to grow. Secondly is when you look at more formalized tech enabled or tech centric businesses, be it startups, there's a lot of deal flow which is happening, this consolidation which is happening, so obviously there's a transaction volume that comes from there as well. How do you see those big 2-3 pieces when it comes to growth in this segment?
Good question. So I think, look, as I said, the category is still evolving. Too early to really sort of pinpoint and say that, look, these would be the growth drivers. But having said that, there are sweet spots clearly, and maybe seen that there are conditionalities, there are sort of contingencies involved, and which is where I think financial services, NBFCs, etc., and financial services at large actually is a big sort of a segment to look at. The second would be really MSMEs, right? Because look at B2B payments, collections, etc. It's a big pain, and as I think you rightly quoted at the beginning of the chat, there is almost about 11 lakh, 12 lakh crore which is stuck on account of delayed payments, right? So I wish there was a mechanism such as an escrow which could enable and empower them to sort of engage in sort of peer-to-peer transactions or B2B transactions, right? So that again can be a big, potentially big sort of a mover of the needle. And the third, of course, would be cross-border, right? So and coupled by the fact that even in India you still do have large sort of B2B commerce and platforms which are emerging, where there are buyers and sellers, etc., on the platform. So I think some of these things put together, overall, escrow as a service, I think is a big area, okay, standalone. Right. And obviously, as the category sort of evolves, like any other fintech, there could be two paths that people could take. Either they could sort of, go on a path of offering escrow as a service per se as a player, or there could be certain players who, let's say, and that is, a natural progression for, let's say, somebody like us, that you enter in the life of the customer through escrow as a service, and then, of course, add a ring of value-added services to other financial products to kind of, sort of have a more sort of a, engaged relationship with your clients and customers.
Right. And very interesting. One thing I always wonder is that when it comes to any kind of a contingent triggering event driven or rules based kind of a transaction flow, naturally there is a big gap which even technologies like blockchain through smart contracts is trying to target. Do you see that as a complementary angle for you? Because obviously when it comes to decentralized smart contracts, I mean in the classic sense, one can have private, I would say, islands within the entire product mix. Is that something which kind of you see as an efficiency play going forward? Because currently I'm assuming that you have a certain set of customers, you kind of figure out the use case, and effectively then it becomes a solutions play from your end.
Right.
But over time it will become more and more DIY.
No, absolutely, 100%. Emerging and immersive technology like blockchain would be big enablers. So if you today look at how this platform and how our proposition has become more sharper and meaningful, is because evolution of the the entire stack, digital stack, number one. Okay. The public infrastructure that we've created, KYC norms, digital signatures. I mean, these were things which people had not even heard of, right, a few years back. But I think as we've evolved as a platform, these things have emerged. Today, an Aadhaar OTP-based signature, right, or a GST, and a number that you take, and you actually kind of are able to on the fly figure out, what is the intent of this stakeholder, right? Whether that person actually, see, one thing is to identify the GST number and ascribe it to an entity. The other thing is to actually, based on their history on the GST portal, you are able to actually take a view on their intent and their credibility, right? In terms of their sort of going on a GST portal, filing their returns on time, and so on and so forth. So as this ecosystem grows with various technologies, various enablers, the growth of the stack, the digital stack that the government has really worked on, I think ours as a service or as an offering in the market becomes that much more meaningful and relevant for our stakeholders.
Right. Finally, Subhrangshu, just quickly on fundraising. you've raised some capital. I think 1.5 mil last I saw, and I think there was some coverage on.
We've raised about 2 million odd. We've
Right.
raised 2 million odd till now, and I think our view has been very clear between Ashwin and myself and the founders really that we've only raised that much that we felt was sort of meaningful and relevant for us. We've been kind of choosy in terms of actually raising capital, but now we are actually looking at a larger round. Okay, so we're looking to raise in excess of about almost close to about 15 million. Right. Because the idea was that once we reach a certain critical mass and sort of establish ourselves, set the building blocks in place without diluting too much, then we kind of go and raise disproportionate amount of capital with the objective of expanding the business both in India and also looking at the whole cross-border space, and also looking at specific corridors and onshore businesses in UAE and the UK. So we're looking at these two corridors to start with. So Ashwin, as I told you, is currently based out of the UAE. He's more focused and engaged on building the entire cross-border play, the overall vision, overall strategy, especially in the international scenario. And I specifically look at more the domestic play at this point.
And the use of funds here would be primarily on business development, enhancing the organizational maturity, or also there is a large leg of technology investment that you require?
No, so technology investments and technology and product enhancement would be an ongoing journey, right?
Yeah.
But it will be largely in terms of obviously looking at more automation, more digitization, more manpower in terms of expanding our play, maybe a certain amount of provision for regulatory capital, because at some point in time, we may also want to look at, other forms of regulations and other, forms and evolution of our business into other lines of business, right? Let's say maybe lending at some point in time. I don't know. Maybe that's something that we're thinking of. And also obviously sales and marketing.
I can smell an NBFC license coming our way soon.
Look, I mean, it is a natural progression, right? It's like sitting in a stadium and watching a match, okay? And you're, sort of privy to what you're doing. But at some point in time, if all things go well, and if we feel that that's an opportunity moment and it's something that, that really adds value to our customers, more importantly, and us as a model, we would definitely be open to looking at it.
Makes sense. And this was a very interesting chat, and almost, it's been in existence for such a long time, but it still feels like a category creator. Just because of the.
No, it is a category creation, sort of a role that we are playing, and I think the category is still very, very, very nascent.
Yeah.
Okay. Yes. And I think we as a firm, we as a category, not even started crawling. Okay.
Yeah.
Even now, larger companies still, when you talk to them about an escrow as a service, escrow as a concept, it's all Greek and Latin. Okay. So I think a lot has to be done. A lot remains to be done. Still very, very, very early days and nascent days for us as a category, us as a firm. So excitement. And as we call it, it's always day zero for us. That's how we kind of keep approaching things on a day-to-day basis.
Appreciate you taking the time. I think it was a...
Lovely. No, my pleasure. My pleasure. Really, really lovely chatting with both of you. And I think that what made this conversation that much more interesting and exciting was that, or probably less challenging, I would say, on the flip side, is because you're bankers, you're people from the financial services ecosystem, so you understand what I'm talking about. And
we can pretend well as well, even if not, we can pretend to understand.
No, not at all. I think you're just being humble, but I think good that some of the questions that really came my way were very, very meaningful and very, very pointed and sharp. So really, thanks for having me, and thanks for this conversation.
Absolutely, Subhrangshu. It was an absolute pleasure, and we wish you all the best and for bigger and better milestones in the future. And with this, it's Nikhil Arora. With me, it's Sharat Tupran signing off.